On Friday, we started getting max fear out here in the stock market as stocks came crashing down. However, are we headed for another Black Monday event? We're going to go over some of the charts, look at the similarities, and also some of the differences. And you want to pay very close attention this week to these 3 days as they could provide some massive opportunities out here in the stock market. Now on Friday, we started seeing max fear in the stock market, and look at the fear and greed index. Right now, we are sitting at 4. This is one of the lowest readings I've seen in some time. If we scroll down to the fear and greed index and look at the different metrics that basically comprise the fear and greed index, we have market momentum clearly to the downside. We have stock price strength, extreme fear territory, breaking lower. We have stock price breadth, not quite at the lows at this moment, but definitely starting to weaken. And look at the put call ratio. Put call ratio screaming to the upside, not quite yet at 1. Then we look at the volatility index, the VIX. The VIX going above 40. And this is something we talked about on the live streams in the past, early on in trading. I remember reading a trading book that said when the VIX is above 40, it's a bottom in the stock market. But 2008 basically showed me that was not necessarily the case. Then we look at safe haven demand, also an extreme fear. Then we look at junk bonds, which we'll take a look at here in a few moments, also showing extreme fear in the stock market. Now, when we look at this week's most recent investor sentiment survey, notice the bulls also dropped down once again to 21.8. But look at the neutral category. Only 16.3% of participants believe the market's going to be neutral. And look at the bears. This is the most bearish reading we've seen in some time at 61.9. Now, Warren Buffett's had a famous quote, "Be fearful when others are greedy, be greedy when others are fearful." So here's a question I have for you guys. Is now the time to go ahead and be greedy? We can see this article right here. Warren Buffett's been waiting years for a crash like this, but he might not be buying just yet. And we look at some of the highlights from here. Warren Buffett has socked away $321 billion waiting for a market to crash like it did this week. And we've been warning about this on this channel time and time again. And people said, Warren Buffett's too old. He doesn't know what he's doing. The market only goes up. Once again, the famous investor looks like, you know what? He has made the right decision once again. So Friday morning around 6 a.m. in the morning, China went ahead and announced they're going to impose 34% reciprocal tariffs on all imports of U.S. goods in retaliation for Trump's trade war. And after the bloodbath that we've seen out here in the stock market, China also says market has spoken after Trump's tariffs sparked global stock market rout. And this is what has a lot of people concerned that maybe, just maybe, we may be headed for another Black Monday event. Now, if we come over and look at these two charts real quick of the SPX, which is a cash S&P index, the chart on the left, this is going to be what happened back in 1987. Now, if we scroll just a little bit more, look how large that next day was. That one candle on Black Monday went down 20% on one single day. Now, we've been flirting with the circuit breakers this week, but something else I want you guys to pay attention to. There's a couple things that are very similar on these charts. The first one's going to be, look, we kind of have a little double top right here. Double top, top number 1, top number 2, and then we came down to what? A double bottom pattern. We get a nice little bounce up. However, we did not hit that double bottom target to the upside before it started to roll back over. And if we look right over here on the right-hand chart, this is also going to be the SPX, but this is going to be the current market conditions. Kind of a double top, maybe a triple top-ish situation out here on the daily chart. But then look what happened, all right? Once we broke from this area, bottom number 1, bottom number 2, and I kept telling people, watch out, the selling is not over with yet. Some of you guys want to heckle me in the comment section, and that is all fine. We see right now who is getting the last laugh, because in a matter of 2 trading days, look how far the S&P has dropped this time around. We have dropped around 9% in a matter of 2 trading days. Now, something else I want to pay attention to is if you look right up here, all-time highs, right down to the low out here on Friday, we're down roughly 17.5%. If we come over here and we look the day before Black Monday, from that recent swing high down towards the low, the S&P 500 was down 16.73%. So if you think the market has already gone too far too fast and there's no way stocks could continue to fall, you might be in for a rude awakening. Now, something that does give me a little bit of hope that maybe, just maybe, we'll start to get a bounce out here this week would be when we come over and look at the MACD indicator. look how sick it looked back in 1987, which is the chart on the left. The MACD indicator was just plowing, making new lows. Even with the massive sell-off, as we look at the chart on the right-hand side that we've seen this past week, the MACD indicator still at this point has not been able to come down and make a new low just yet. So maybe, just maybe, we start to get a little bit of firming up over here, which could set up some type of MACD divergence, maybe come back up here into this gap, and then we'll see, do we roll back over? Now, to make you guys aware, I trade with 4 prop firms out here: Apex Trader Funding, My Funded Futures, Tradeify, and Take Profit Trader, where you can get payouts daily. And if you want to ensure you get the best deal with these 4 prop firms, make sure to use the link in the description box down below. Last week, I shared with you guys this stat that basically showed whenever January was positive by more than 2%, every single time this has occurred, the 2% moves have always pinned to the upside. 18 times 2% moves that have happened to the upside. 0 times have we had negative 2% moves or more. Well, you know what? This week completely busted that stat. And with stats, we got to take them with a grain of salt. They are nothing more than a stat. With that being said, I do have another stat I want to share with you guys today. And this is going to go ahead and look at the VIX. This could be the 30 best matches to a 45.31 VIX and 10.5 point decline in the S&P 500. And Wayne went ahead and pulled this stat going back the last 30 years. And let's take a look at this real quick. We can see that one day after we've had the VIX above 45, notice 24 times we have been up the following day. 6 times we have been down. Even 1 week later, we have been up 24 times, down 6 times. 1 month later, up 25 times, down 5. And you can see that this stat basically shows that it is very bullish out here for the market, that maybe, just maybe, we've started to see some capitulation out here. Now, when we look at the volatility index real quick, look at how strong of a candle that was. We woke up on Friday morning and it was like, wow, the VIX was already getting it going. We look out here on the 5-minute chart, VIX basically closing right near the highs of the session, and the VIX closing up 50% on the day. Now, normally whenever the VIX is up greater than 10%, we expect the stock market will be up on the following 1 to 2 days. However, when we get into these parabolic moves with the VIX, you can throw all those stats right out the window. Now, another sign that we're starting to see some capitulation doesn't mean that we have fully capitulated yet, but look at the volume out here on the SPY on Friday. This is the largest volume we've seen in quite some time. If we scroll this all the way back, this is the largest volume that we've seen for sure within the last 2 years. And again, this is what we see a lot of times near capitulation out here in the stock market. Now, if you didn't think that that was bad enough out here, now if we come over and take a look at the breadth real quick, look at the stocks above the 20 period moving average. Right now, we can see essentially there's only 5.7% of stocks above the 20-day moving average. We come over here and we look at stocks above the 50-day moving average, only 11.33%. So again, if we go ahead and we scroll this out a little bit and put this on a monthly chart, notice we're getting very close to areas where we've seen bounces in the market, at least when we're looking at the breadth stocks compared to the 50-day moving average. We look at stocks compared to the 20, we're right down within that area where at any moment we could see a bounce in the market. Will it be a fact that Trump decides to cave on those tariffs? Or is it going to be the Fed coming to the rescue? Or maybe, just maybe, we're going to see the government actually be able to extend the tax cuts. Now, let me know in the comment section down below, do you guys think the stock market is going extremely lower come Monday? Or do you think Monday is going to produce a bounce, which is also indicative of that past stat that I showed you guys, anytime the VIX is over 45? Now, one of the things that does have me a little bit concerned about looking for a tradable bottom here is so many people are expecting it since we've had such a big move out here in the stock market. However, is Trump getting ready to capitulate on his tariffs and actually start walking things back? We see today, U.S. starts collecting Trump's 10% tariffs, smashing global trade norms. But then we see this article right here, why Trump may get away with his tariff trauma. And if we scroll right down here really quick, and basically what this article is going to go on to say is basically, I can't be the last one to reach a deal with Trump, because if I'm the last one, then I'm the one who's going to get screwed. And this is what a lot of people are thinking that a lot of countries are going to do. Instead of all the countries joining together, the countries are going to start looking for their best interest. So why does Donald Trump want this tariff war? Well, it's very simple. The US must refinance 28 trillion in debt. And look at this real quick. If we scroll this down here real quick, look at this graph. This is absolutely insane. The amount of interest payments that we pay. So what does Trump want to do? Well, maybe it's going to orchestrate a recession, or maybe, just maybe, Trump will be able to persuade Mr. Jay Powell to go ahead and cut interest rates and stop playing politics. Then we look at this article right here. The tariffs that led to the biggest stock market drops since the pandemic may have been a result of an error. And what this goes on to basically say is the American Enterprise Institute recalculated rates based on correct numbers, and no tariffs should exceed 14%. So do you guys think the tariffs was a mistake? And if so, was it done on purpose? And is this nothing more than a ploy trying to bring everybody to the table for better negotiations? We see this article right here. US stocks aren't a screaming buy just yet, but we are getting close. And again, that's what a lot of people are thinking out here. Is this big washout getting us very, very close? Well, if we come over and look at a monthly chart, let's say on the Qs real quick, notice we've almost made it all the way back to this structure breakout point, which is going to be about 409.73. On the monthly chart, you might say, wow, this is a huge drop lower, but is it really? Because if we look at the last drop that we saw out here on the monthly chart, notice it went all the way down to roughly 37%. And notice how long it took to get there. Look at the MACD indicator. As we came up making new highs, the MACD indicator has just now started to get a bearish cross on the monthly chart. So there could be a lot more pain ahead. However, that doesn't mean every single candle is just going to be straight down. It could be up, down, all around. Even on this 37% decline on the way down, we still had a few monthly candles that were up as the market was declining. Then you look at the other major correction that we saw before that, and that was going all the way back to the '08 financial crisis, where we saw the NASDAQ actually drop roughly 54%. So right now, if we measure right up here from the highs, right down to the lows, we can see that the NASDAQ has dropped roughly 22%, which now we can officially say the NASDAQ is in bear market territory. Now, if the tariff news wasn't bad enough and stocks absolutely cratering out here last week, let's also not forget the Atlanta Fed has also basically came out and said they predict minus 2.8% growth out here in the fourth quarter. So slowing economy, we have tariffs, which is going to slow the economy even more. How much longer before we start to see a weakening of the labor market? Because when you look at the data that we got on Friday, the jobs data actually came in relatively well. Non-farm employment change, we added another 228,000, and the forecast was for roughly 137,000, and the previous reading was 117. So the jobs at this point has not started to reflect the weakening of the overall economy, but something to note, the jobs are normally the last thing to fall. If we come over here and we look at advancing issues versus declining on this chart, there was 86.4% of issues declining on the day. So all in all, nothing more than a bloodbath. If we look at the sectors across the board, like expected, every single sector was in the red. No sector out there was spared. There was nothing but sell, 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 and ask questions later. Now, when we come over and look at the Dow Jones chart up in the top and the transportation on the bottom chart, notice as the Dow Jones came up there and making that double top, what do we have with the transportation index? Transportation index was making a lower high and basically giving us a heads up, watch out, lower prices were likely to come, and it continues to go ahead and drift lower. Then we come over and look at the S&P versus the HYG, high yield bonds. High yield bonds absolutely getting destroyed out here, but also the S&P 500 is as well. So basically they are correlated at this moment. Something else that's a little bit concerning though, when we come over and look at the 10-year yield versus the 2-year, once again, what do we see? We see the yield curve starting to steepen. And again, this is normally when we start to feel pain out here in the stock market. So could JP Morgan be right? As JP Morgan now says, there's a 60% chance of a recession after tariff hikes. And again, they're expecting sometime in the third quarter to go ahead and have that recession go ahead and officially kick off. Now, if we come over here real quick, we started looking at the charts. I want to come over and look at NVIDIA real quick. And this is something we've debated on this channel quite quite a bit, and even during the live streams. And if you guys don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. This week, we're going to be giving away more Take Profit Trader accounts during the live streams. And we look at NVIDIA real quick on the monthly chart. Notice the MACD indicator just starting to cross to the downside, and we zoom this chart out, the MACD indicator has never been this high in time. And again, this is all signs of a massive bubble we've had out here in the stock market. Now, NVIDIA has made it down towards the 38% retracement, and a lot of people thought I was crazy thinking NVIDIA would ever come back towards the 50% retracement at 81.95. But now as we look at NVIDIA trading at $94, it does not look that far-fetched. And will we see NVIDIA maybe even going lower than that out here? We take a look at some other stocks like Meta. Meta giving it up, MACD indicator on the monthly chart about to cross bearish. We take a look at Tesla, absolutely been getting destroyed, having that double top pattern where we had a look above, failure as we came back down, and now Tesla has been on the decline as well. You take a look at Microsoft, also giving it up, rolling over on the monthly chart. The MACD indicator is still looking very bearish at this moment. Now, if we come over real quick, when you take a look at the Russell 2000, let's look at this out here on the monthly chart. Top number one, top number two, and notice what we have right down here. We have MACD divergence as the Russell 2000 on the monthly chart came up and made a new high. The MACD indicator simply did not confirm that. And if this is indeed going to be a double top one, top two, where does that pattern go ahead and complete at? Well, let's go ahead and map this out real quick. That would give us a price completion all the way down here at about 78.90. And if we measure right up here from the recent high down towards that level, that would be a drop of roughly 66%. That is ugly, ugly, ugly. As we come over, look at the daily chart real quick. Notice we've had this ABC pattern already completed. Notice how far away we are from the anchor VWAP, right up here from the 52-week highs. And on the daily chart, as we've been cascading lower, notice what we have. We have huge MACD divergence. And if we look at the candle we produced on Friday, actually closing with a hammer candle. So could this give the bulls a little bit of optimism out there that maybe, just maybe, we're about to get a bounce? We come over, look at the Dow Jones, finally breaking through that double bottom pattern, then proceeding to gap massively lower on Friday. Huge, massive gap, down 5.3% on the session. And again, we've had 2 days of very high volume out here. However, even though with the massive sell-off we've seen, the MACD indicator at this point is still not confirming those lower lows. So is a bounce around the corner? Do we come up and fill both of these gaps or just one of the gaps? Now, let's jump back over and take a look at the SPY real quick. On the monthly chart, we saw this structure breakout point. I'd love to see the SPY come back and test at about 480.54. You can see right over here, we broke out from that level. The market has failed to come back and retest that. On the monthly chart, the MACD indicator just now starting to cross to the downside. Then as we come over and start looking at the daily, absolutely bloodbath out there. MACD divergence potentially setting up, smashing our ABC targets to the downside and such. And we have 2 large gaping gaps. On the 4-hour chart, MACD indicator is making new lows at this point, but at some point, we are likely going to get a bounce in the market. Out here on the 30-minute chart, look at the MACD indicator now, way below the 0 line, starting to flatten out. So are we on the verge of that pullback coming into play? You can see we've had those 2 large gaping gaps. If we can get above value area low on Monday, then I want to look for a target right up here towards the point of control, then maybe value area high, and then maybe all the way up here towards gap resistance. If we can break gap resistance, then I want to hold all the way up here for that gap potentially being filled somewhere around 537.71. If we were to pull our Fibonacci retracement from the swing high right down here towards the swing low, notice the 50% level is just shy of filling that first gap. Now, one thing to take note of, when we start to get a retracement back up, quite often, once we hit the 38% retracement, the market will either consolidate or start to get a pullback at or near that 38% Fibonacci retracement level. As we come over and start looking at the futures markets real quick, look at this on the 4-hour chart. We had a massive range out here this week, 699.25 points. Absolutely massive. Now, one of the areas that has my attention is going to be this minus development area. Can we maybe make our way back up towards that area this week, which will come in somewhere around 53.20 up here towards about 53.75. Well, if we go ahead and we pull a fib when the tariffs were first announced, down here towards the low, notice that area, that minus development area, falls right within that 38% Fibonacci retracement level, which would make sense that the market makes a bounce back up towards that area. Now, keep in mind, we are closing below the weekly value area low, which is a mile away at this point. From the closing price on Friday, we're roughly 338 points away. And if we scroll back, we have not had a 338 point range in quite some time out here for the S&P 500. However, if we do somehow manage to get above that value area low, I would then want to start targeting maybe towards that point of control. But again, I think that's way out of the question at this moment, even though with that rule that whenever we close outside of value, quite often the next 1 to 2 sessions, we come back and test it, except for when we're this far away. Now, maybe we do sometime this week or maybe even next week. Let's not forget, we are starting earnings season once again on Friday. We're going to have JP Morgan, we're going to have BlackRock, Morgan Stanley, Wells Fargo, to name a few. And the bank stocks have absolutely been getting taken to the cleaner as of recently. Notice what we have going on Friday. We just kept drifting lower, lower, lower. And if we look, we're closing just below value area low, which really comes in about 5103. If we can get back above that on Sunday night, I want to target 5109. I would then want to target this next high volume node, 5172, then 5211, and then up here, 5265. Anything above that, I want to target that minus development area off the weekly profiles, but also that correlates along with Friday's minus development area as well. Now, before we come over and look at the NASDAQ real quick, let's go over and take a look at the banking stocks. Let's take a look at XLF real quick. Absolutely getting destroyed. Massive volume, down 7.3%. And if we actually come over and look at JP Morgan real quick, JP Morgan was down 8% on Friday. Absolute bloodbath, and that could be setting up a larger ABC pattern on the way down. Let's go ahead and map this out. This would be something like this: A to B leg, the B to C leg, and we get the price completion right down here at 199. So will the earnings be what pushes JP Morgan down to complete that target, or do we come back up and start testing those gaps first? Now, this week we have 3 days that we really want to focus on, and that is going to be coming up on Wednesday. We have the FOMC meeting minutes at 2 p.m. But then on Thursday, we get the CPI or CPI, however you want to pronounce it. And we're going to see, has inflation started to cool as the overall economy has started to slow down? And then on Friday, we get the PPI price. We get the PPI coming out at 8:30 a.m. Then at 10 o'clock, we get consumer sentiment, followed by inflation expectations. So those 3 days this week are going to be the key days where we have major economic news that could sway the markets, either pouring more fuel on the fire to the downside or maybe starting to get us that bounce in the stock market. Now, we come over and look at the Qs real quick. Qs already smashing the weekly targets, and that would be this double top target. Top number one, top number two. Then the target was down here, was up here at 458.02. We smashed it. There was no looking back, and we did it on large volume. Notice the MACD indicator on the weekly chart looks horrible at this moment. And on the monthly chart, we just started to get that fresh cross to the downside. However, on the daily chart, we do have that MACD divergence with that massive volume on Friday. Then as we come over and look at the 4-hour chart, again, massive volume out here. And the MACD indicator not quite yet making new lows. And these gaps above us do have my attention. We'll see if some of this fear starts to abate early on this week. On the 30-minute charts, what do we got? MACD indicator trying to cross up. So could we maybe start to get a bounce back up? If we can get above value area low, I want to target the point of control. I want to target value area high, and then I want to target gap resistance, which AKA would be right near the highs on Friday. Anything above that, let's see if we can work our way towards filling that first gap at 450.69. Now, be mindful, if you're going to try to catch the bounce in this market, there could still be a lot more pain ahead where stocks continue to go ahead and crater lower. Now, if we come over and look at the weekly profiles for the NASDAQ, we had a 2,656.75 point range this week. Absolutely massive out here for the NASDAQ. We also, as I'm looking at this profile, notice we have this minus development area where when we start to get a bounce in the market, would make sense that the market bounces back up towards. And again, if we just pull our fib from this top of this straight leg down, right down towards the bottom, the 38% retracement comes right in that area at about 18,405. Keep in mind though, if we do go lower come Sunday night or Monday, we would have to adjust these Fibonacci retracement levels on the S&P and on the NASDAQ. Now, if you notice, value area low is right up here at about 18,646.25. And again, we closed miles and miles below that out here this week, which sets up the case. Highly probable that this week or next week we come back and test that level. So who is going to be the brave soul out there that's going to try to play that bounce all the way back up? For me, I do plan to play some bounces early on this week, which you guys will see me do so during the live stream. So if you guys don't want to miss that, make sure you are subscribed and the bell notifications turned on for all. Now, we do have an untested point of control from this week at 19,401. And something I forgot to mention with the S&P 500, which will jump back over to that chart here in just a few moments. When I go ahead and remove the drawing objects, I want you guys to see something real quick. We have one untested point of control. We have two untested point of controls. And now we're going to have three consecutive untested point of controls, which means highly probable come Monday, we are going to go ahead and take out 17,758.5. Now, is it going to be Sunday night or is it going to be Monday? I don't know, but right off the rip, I'm going to be looking for that area to come back and get tested. Also on the daily profile, notice what we did. We closed below value area low on Friday. We closed below value area low on Thursday. And even on Wednesday, we closed below value area low. And I can't remember a time in recent history where we've had 3 days back to back to back where we've been able to close outside of value. So they're going to start to become high probability targets in the very near future. And that brings me to my point. Once again, we are closing below value area low, and we have three consecutive untested point of controls on the S&P. The first one way up here at 5717.75. The next one at 5481.5. Then we have the one from Friday at 5109. Now, highly probable we come back and we'll hit the first point of control. But I got to warn you guys, whenever we start getting three or more stacked point of controls, it's not uncommon for the market to come up and take out two of those point of controls in one single day. However, I don't know that I think the S&P is going to be able to rally all the way back up here in one single day to 5481.5 unless we see some positive developments out here with the tariff news. Now, if you guys would like to learn how to withdraw within the buffer zone with Take Profit Trader, then you want to make sure to watch this next video right here.